Hi, in this video I'm going to show you how to get your mortgage paid off early and save tens of thousands of dollars so you have a nest egg for your retirement or just a lot of extra money. And I'm going to show you how to do this with the help of the federal government. My name is Lance Moore and I'm a real estate agent in Tampa Bay, Florida. And the reason why I'm doing this video is because over the last 10 years, I've seen more people have less equity in their homes. And I'm getting sick of banks and so-called professionals taking advantage of people just because they want to make money and not doing the right thing in helping people out. The one thing I'm going to ask from you is if you know anybody who owns a home, family members, friends, co-workers, please share this video with them. Don't assume they know what I'm going to go over in this video and are doing it. Over the past 20 years as a mortgage banker and a realtor, virtually no one knows about this and even fewer people do it. So you could help a lot of people by sharing this video with them.
All right, everyone. So before we get in and go over my real estate equity blueprint, I want to go over something I think is very important to everybody watching this, every homeowner and future homeowner, and that is why so many people do not have a lot of equity in their home or money in their home when they get older, or even now when they're younger. And a lot of it has to do is understanding the statistics. So statistically, the average homeowner purchases a home every 8 years. They refinance their home every 5 years. So what most people do, and this is from me dealing with thousands of home buyers, both as a lender and a real estate agent, they buy a home, they put it on a 30-year mortgage. They live in it for 5 years, statistically. Then they refinance. They put it back on a 30-year mortgage. They live in it 3 years. Then they buy it, they sell it. Then they buy another home. They put that one on a 30-year mortgage. They live in it 5 years. They refinance it back to a 30-year mortgage, and the cycle continues. Now, it may not be like this statistically. It may not be for everybody 8 and 5 years, but these are the numbers. When I was in lending, I probably refused about 25 or didn't do 25 to 33% of all my refinances. And the reason is because it just did not behoove the people to do that. I would have people come into me and they would want to refinance because they're saving money, or maybe the interest rate lowered or whatever. And they refinanced and they've been paying on their mortgage for 8 years and they want to refinance it back to a 30-year mortgage. And I'm like, why would you do that? What are you going to do? Just throw those 96 or 100 payments out the windows? So I did a refinance video. I'll put the link above. And if you're thinking about refinancing or want to know more about this, you could watch it. But if you look at banks out there, they really understand this. They know how mortgages work. They send letters in the mail all the time. Refinance your home, no cost. Zero closing costs to refinance. They do this all the time because they just want to keep you like the gerbil on the treadmill going around and around and around. And unfortunately, most loan officers aren't giving people good advice. Either one of two reasons. They either are just doing it because they want to make a buck, or they don't really understand how a basic mortgage works. Now, sure, the bank, they don't care about us. They don't care about any of us. They just want to make a dollar, and you can expect that from them. So if you're not really sure, check out that video. I'll put it above. Now let's get into what I consider one of my favorite parts of home ownership, and that's tax write-offs. So I love tax write-offs. I always have. When I bought my home at 23 years old, the first thing I did was went to an accountant. I wanted to get the scoop on what was going on, and being self-employed, I have to know it. So I want to just state right up front, consult an accountant or CPA. I'm not an accountant. I'm not a CPA. I'm not giving you tax advice here. This is just common sense. We're going to run through some stuff right here that a lot of you and most of you may already know, but we're going to put a different spin on things a little bit so you could save a lot of money. So let's start off, and we're going to use the loan amount of $210,000, an interest rate of 4.25%, with the principal and interest being $1,033.07. Now, I understand your loan amount, your interest rate, your property taxes you pay, even your, even the, what tax bracket you're in may be all different, and that's okay. Just go with me on this. So based on these figures, the interest paid for the first year is $8,856. That's the interest. Majority is interest. It's not principal. The property taxes paid are $3,463. So this is property taxes right here. So you have a total tax write-offs on the interest paid on the loan of $88.56 and the property taxes paid in the property of $34.63. Your total is $12,319. Now that's your tax write-off. That's what you would be writing off. So if we looked at this and we said, okay, well, you're in a 25% tax bracket, which is a pretty common tax bracket out there. It's a federal tax bracket, is what I'm talking. So your write-offs would be, it's basically like the government, if you didn't do anything with the exemptions, it's like they would give you a check at the end of the year for $3,080. So if you broke that down into a monthly savings, it would be $256.65. That's 12 payments a year. So it's a substantial savings. So let's go over, and we're going to go over the real estate equity blueprint. So of course the goal is to pay your home off in full early, saving thousands of dollars. And I'm going to go through this pretty quick. I'm not going to read everything to you. I am going to tell you, when buying a home, picking your real estate agent, picking your loan officer is critical to the process. A lot of times people, always look at price, but it's not the price, it's the cost. People make money because of cost, not price. So let's go through this. I'm going to show you how you can pretty much save around $10,000 to $100,000 and put it in your pocket, not the bank's pocket. And I'm going to be going quick, but I want to make sure you understand all this. So let's just go over a couple simple facts for you. First, we're borrowing $210,000 at 4.25%. So basically doing that, you're going to pay the bank $161,906 in interest. So in other words, you're borrowing $210,000, you're going to pay them $371,906. Wow. After paying your mortgage for 10 years, making 120 payments, you're going to still owe almost 80% of what you borrowed. The total amount that you'll pay in 10 years is almost $124,000. Out of that $124,000, only $43,169 has gone to reduce your principal. The rest went to pay your interest. So after 10 years of making payments of $123,968, only 20% or so is going to your principal to pay off your mortgage. After 15 years, you still owe about 65% of what you borrowed. All right, so it's good to really understand those numbers. So let's start off and just get into the basic mortgage. $210,000, 4.25%. You're basically not saving any money. This is what most people do right here. Now, it used to be a little bit more popular than it is now, but a lot of times people say, hey, let's buy down the interest rate. Let's, instead of 4.25%, let's buy it down to 4%. And sometimes builders may even offer this. And that's great. Well, doing this, you're going to save $10,980. And that's good, because it's going to take your payment down to, instead of $1,033, it's going to take it down to $1,002. But let's say you did the buy down to 4%, and you took the savings of $30.50 and you just added that toward your principal every month. So instead of paying $1,002, you pay $1,033, like you would do at 4.25%. Well, if you do that, That option right there saves you over 30 years, $20,511. So you can see that's a pretty huge savings, but nothing compared to what we're going to get into. So what we want to do is let's go over the real estate equity blueprint. There's 3 options that I'm going to show you. The first right here is called a bi-weekly payment. Now, basically what a bi-weekly payment is it's making a payment every 2 weeks. So you're basically going to take your mortgage and divide it in half, and then you're going to make a payment every 2 weeks. So essentially, you're making 13 payments a year instead of 12. Most people could do this, and it's really going to help. It's basically, so if you make $516.54 payment every 2 weeks for 309 payments. So you're not going to be making 360, you do it for 309 payments. You'll be saving $26,455 by doing that. It's a really big savings. Now let's jump over here. Now, if you look right here, remember when we were right here and I said, okay, your monthly savings is $256.65 for 12. Well, let's go a little bit more with this. Over 13 payments, this is what your savings is, $236.92. But if you made 26 payments per year, all right, well, your savings would be $118. When I say savings, the government's basically giving you $118 26 times a year. So let's say you took that $118 and you put it back into your biweekly payment. So you take the $516, add 118, it's $634. So now you pay $634.54 every 2 weeks. Now keep in mind, this 118, this is like money Uncle Sam's giving you. So why not do it? Now also, I'm just talking about if you own the home as your primary residence. If you're an investor, I'm not even getting into the depreciation, what 1031 exchanges are. I mean, that's like game on when you're an investor. That's why the goals to own investment properties if you can, or if you want to. But we're just talking about a primary residence here. Of course, this will work the same way whether you own a 15-year whether you have a 15-year mortgage, whether it's a rental property. If it's a rental property, you'll even have more savings. So if you do this, you're now going to be done paying off your mortgage after only 220 months instead of 360. So you're basically eliminating, by doing this, what the government's giving you. Keep in mind, you're doing the bi-weekly, but the 118, the government's like giving you that money. Why not use it for something instead of putting it in your savings account or spending it? So you're going to be debt-free on your mortgage in under 19 years instead of 30. You'll be saving almost $70,000 in interest and in payments. Now, this is good. This is strong. But most people, in calculating and looking at tons and tons of people's financials over the years, could, if they really wanted to, cut out maybe some restaurants every week, cut out some Starbucks every week, save a little bit more money. So instead of doing $118, which the government's basically giving you, assuming in your tax bracket and your CPA could figure this, let's do $300, okay? This is where it really gets interesting. So instead of $516 every 2 weeks, you pay an extra $300. Now, you're going to have to make a sacrifice doing this, no question, but it's going to really pay off long term, okay? So your biweekly payment is $816. Again, this is only principal and interest. But doing this, you're going to eliminate 206 months of payments, and you're going to be debt-free in under 13 years instead of 30, and saving almost $100,000, saving $99,235 in interest in payments. That's insane. So let's go over an overview, sort of a recap. Again, the main thing a lot of people are doing is the first option. It's just a standard mortgage, 30-year mortgage. You're not saving anything. You do a 1/4% buy down. In this case, you're saving a little over $10,000. If you do the buy down and reinvest that money, the $30.50, you're going to shave off a little time. You're going to save $20,000. If you do a bi-weekly mortgage, you're basically going to save $26,000. But if you do a bi-weekly and just give back, in this case, what the government's given you, $118, you're going to save almost $70,000. And if you could just add, instead of $118, just add a little bit more of your own money, cut some expenses somewhere, and add $300 in an extra payment, you're going to save almost $100,000 in savings. So instead of paying, $371,000 over 30 years, you're only going to pay $272,000. So instead of paying total interest of $161,000, you're basically sitting at $62,000. It's insane, and you're paying it off in 13 years or 19 years. I mean, this is hopefully, you could do one of these. I know if you're in a fixed income bracket, then it does get a little trickier, but you could still do it. Talk to your accountant and tell them, and have them talk to you about different options, because it is an option.
Now, I hope you enjoyed this educational video and found it enlightening. And please don't forget to share this video with anybody you know that owns a home. If I could help you in the Tampa Bay area find a pre-owned home, a new home, or sell a home, please contact me. I'm a knowledgeable, experienced, and aggressive realtor that's always going to look out for your best interest. Thank you for watching this video. Thank you for watching my YouTube channel. And if you do like this video, please comment below and let me know your thoughts. Have a wonderful day.